Good afternoon and welcome to the webinar. It is 12:01 Mountain Time and we have a lot to cover, so we will begin. Thank you all for joining us for the Loan Packaging as an Earned Revenue Strategy webinar. This webinar is a part of a monthly series that is a part of the Native CDFI Capital Access Initiative some of you are participating in, which is funded by the Northwest Area Foundation. Throughout the webinar, if you have any questions, please feel free to use the question and answer section of the webinar platform located at the top or top right of your screen. Without further ado, I would like to welcome our presenters. We are hearing from Cherry Creek Mortgage Company and the USDA Rural Development. And first, I'd like to welcome Mike to the presentation.
Thank you very much, Stephanie. My name is Mike Munson. I am the Special Products Manager with Cherry Creek Mortgage Company, and we are presenting today on the HO184 program and how to kind of incorporate that into a lead generation type structure with us. Next slide, please. So a little bit about our history. We were founded in 1987 by our current president and CEO. It's one of the largest family-owned mortgage companies in the United States. We're really committed to making sure that we stay connected to the communities we lend in. And along that line, we are very dedicated to expanding access to financing in Native America. So with that, we launched the 184 program last year. And we've been growing steadily ever since, continuing to expand to different states and different municipalities with this program to get more borrowers into homes with the great benefits that this program offers. Next slide, please. So a little bit about the program history. It was established in 1992, and the real purpose of the program was to expand access to financing for Native Americans and Native American tribes. The real game changer with this program is it took away a lot of the limitations that lenders had as far as lending on tribal land. So this program initially was designed to provide access to capital on tribal land. In about 1996 or 97, I believe, it was expanded to include fee simple land as well. So this program can now be used on both fee simple and tribal land as long as it's in an eligible area. Currently, there's 36 states that are eligible to participate. Not all of them are fully approved. Pretty much anything west of the Mississippi is going to be eligible. Anything east of the Mississippi, it kind of goes county by county and state by state. Since the inception of the program, we've done about 35,000 of these loans, or about $5.75 billion in loan volume. And the nice thing about this program is it can be used by both individuals and by tribes. So tribes can leverage this to kind of use in conjunction with your Title VI funds. You can use the Title VI for the infrastructure and then the 184 for the construction of the housing. And that takes away the low income restriction on the housing itself. Next slide. So some general requirements of the program. First and foremost, the borrower has to be an enrolled member of a federally recognized tribe. We just look for a copy of their tribal ID with the enrollment number. As I mentioned, it has to be in a participating state or county, and it can be a single-family, townhome, manufactured modular, a traditional tribal dwelling. We also do 2 to 4 units as well. So pretty much anything that you can throw out as property-wise is going to be eligible for the program. And we also do purchase and refis. So it's not just limited to getting into a new home. If you have a Native member that is already with a mortgage, but this is a better option for them due to the lower cost of the mortgage, lower MI, lower upfront fee, then they can certainly refi to take advantage of that as well. Much less stringent down payment requirements on this program than you see on many others. It's just 2 1/4, and that can actually be gifted entirely from the tribe or a family member, which is something you don't really see with an FHA or a lot of conventional programs as far as that lower down payment amount. Next slide, please. The really great thing about this program, in my opinion, is the no minimum credit score. And what that really means to me and to the lenders that offer this program is that we consider each applicant as an individual. This is really personal lending. I like to talk about it as kind of going back in time 30, 40, 50 years to when you would go into your local banker and they would know you and they would know your story, and they would kind of make the lending decision based off of what they knew about your ability to repay the loan. That's really the intent of this program. So we don't look at a credit score. We take into consideration much more the individual stories. So we have a lot of letters of explanation, and we just try to understand where that Native member is coming from so we can make sure that they're going to be able to make their mortgage payments. We don't want to set anybody up to fail with this program. In general, they have to have a positive credit history, so we don't want to see a ton of outstanding collections. Bankruptcy and foreclosure, we have the 3-year waiting period. And as with anything on this program, there are exceptions to everything. So if the story makes sense and the deal is going to set the borrower up to be in a better position, we're going to do our best to make the deal work. And HUD is in line with that as well. Their goal with this program is to get Native Americans into homes. And they understand the unique circumstances and situations that can accompany some of the challenges of living on tribal land or going through IHS, things like that. And so we have built really good relationships with those HUD representatives, and we get exceptions to try and get these deals through the door when we know the borrower is going to really benefit from the loan. The other nice thing is it's not a low-income program. So there aren't any income limits. Any income that they earn that's consistent and documentable, we can use with this program. We also use per capita income. But the caveat that if more than 50% of their income is from per capita, we do have a couple additional overlays we double check for. We want to make sure they have a history of traditional credit. We want to make sure that they have some reserves and they're able to put a little bit of money down, just because we see those tend to be a little bit higher on the default rate. Next slide, please. So what are the benefits to the borrower of this program? One of the biggest benefits, as I mentioned, is the ability to do this on tribal trust and individually allotted land without a lot of the headaches that you see with other programs and with other lenders. So I've been doing 184 loans for about 3 or 4 years now, and I have seen just about everything you can imagine as far as dealing with the BIA to get an initial TSR, a final TSR, working with IHS on new construction. We have the experience to make sure that the process is smooth for your borrower or for your tribal member, to make sure that this goes through with as few headaches as possible. So that's one of the big benefits, is being able to do construction lending, rehabilitation lending, and purchases on tribal trust land. Other, of course, being the reduced monthly MI for the borrower. So this is set up much more like a conventional loan than a government loan. On a government loan, you typically have to pay mortgage insurance to the government every month until the loan is paid off. Whereas on a conventional, it will fall off once you pay down to 78% LTV. On this program, it follows that same structure and falls off at 78%. So they don't have to pay that extra fee nearly as long as they would on an FHA loan. And the same with the guarantee fee. It is a reduced guarantee fee, which is just the upfront fee they pay to HUD for the funds at the time of closing. So there's definitely some financial benefit. As I mentioned, the other benefit on the review of the applicant's qualifications is the personal lending. They really are reviewed as individuals, not as numbers, not as computer printouts. Each one of these loans is manually underwritten. We review all of the documentation. A human does, not a computer, and we make sure that the story makes sense and that this really is going to be a good deal for the borrower. And as I mentioned, with this program, we can also do construction lending and remodeling and rehab, depending on where the property is. So that's really great. We can do manufactured homes, have them brought in from an approved dealer. We can also do stick-built lending or stick-built construction, as well as any rehabilitation. So if there's a dilapidated property and they want to purchase that and totally gut it and rehab it out, they can certainly do that with this program as well. Next slide, please. So what are we offering as far as kind of the loan packaging? It's not exactly a loan packaging setup. It's more of a lead referral setup at this point, as long as you don't have individuals that are licensed originators. So if you are an organization that doesn't have licensed originators, we will just ask you to collect some basic information about your tribal member. So that'll be their name, phone number, and zip code. You'll send that over to us, and our origination team will make contact with them and work on getting them pre-qualified. and we will compensate you on a per lead basis. So it doesn't matter whether or not it turns into an application. You just send us that information, and we will compensate you for that. It's considered a lead for our purposes. And then they'll sign a consent form to release that information to us, and we'll move forward from there. If you are an organization that does have licensed originators, in that case, we can work with you to establish more of a doc collection pre-qualification setup. But unfortunately, mortgage regulations don't allow us to do that unless you have a licensed originator collecting that information and having that conversation with the borrower or tribal member. All right, next slide. I know that was kind of short and sweet, but I wanted to give you an overview of the program, kind of let you know what we are here to offer for you. I'm here for any questions you may have about the 184 program in general, about how we can structure kind of the lead setup. We want to be a resource to you, even if you never send us a lead or ever send us a deal. If you have any questions about the program, you want to find out more, I would love to kind of help out with that. This is definitely something I'm super passionate about. This is what I spend 80% of my day working on, is just how to expand this program into Indian country. Because the biggest issue we have with this program is education and having people know that it's available to them. So any questions?
If anyone has any questions, feel free to raise your hand or type them in the question and answer field. We'll give just a few moments for questions on this presentation, and if you think of them throughout the next presentation, we will have a general Q&A session at the end.
Well, while everyone is thinking of their questions, I think, Mike, this is so great. I think of all the folks I'm looking at, our attendees, and many of them are doing financial education or they're doing small business lending, but don't specifically offer a home ownership product. And so, what a great way to potentially be able to serve a group of people and serve their clients in a richer way, and potentially generate a little bit of cash doing it. So that's really cool. Thank you guys for being so excited and engaged. Looks like we have a question that just came through. Oh, okay, so we have a question from Lily Kaufman. She was curious, unless your organization has a licensed underwriter, so what's the specific terminology and what's that licensing structure like if it's a mortgage originator, right, if I heard you? Or could you talk a little bit more about that?
Sure, yeah. So if you want to collect the documentation and have that conversation with the borrower and send that over to us, then you do have to have a licensed originator do that, and that process goes through the NMLS, the National Mortgage Lenders Licensing Service. So essentially they have to take a 20-hour class, pass a licensing test that's specific to your state on mortgage regulations, and then they receive an NMLS license number that allows them to have a conversation with the borrower about terms of the loan, interest rate, and things like that. It's one of the requirements in order to have that discussion with the borrower, with a tribal member or any borrower whatsoever in the mortgage industry. So I can certainly provide you links to training. We actually can offer you a discounted training through Cherry Creek if you're interested in that. Anything we can do to help get you set up the way you want to be set up, we will certainly do that for you.
And then, Mike, it looks like we also have another question that came in. They're curious about the referral fees, specifically for the lead-based model, but then I'm also curious if they did have a licensed originator, what the packaging fee would be. Could you address that?
Sure. So for the leads, we're looking at $10 per lead. And again, that's whether or not it works out or not. You just send us over those 3 pieces of information and the borrower consent to release. And then once a month, we will cut you a check based on the number of leads received. If we're doing the loan packaging route and you have a licensed originator, we're looking somewhere more in the $50 to $60 range per submission. And again, we will cut you a check at the end of each month or whatever pay cycle works best for you.
Well, that's great. I mean, $10 isn't tons, but if you had 10 clients a month and all you're doing is sending along their names and then helping them get and you're doing all the work helping them get houses, that's kind of a sweet deal. So
yeah, that's kind of how we differentiated that. So unless you have an originator, we can't let you do the heavy lifting for us. we would love that. Trust me, we would. But unfortunately, our hands are kind of tied due to the regulations. But we still certainly want to show goodwill and say thank you for sending us someone our way that really could benefit from the program. So we're hopeful that that makes a difference for you.
Great. We also had a question about, are you originating the HUD 184A for Hawaiian homelands?
We are actually not doing the 184A for Hawaiian homelands at this point because Hawaii is a brick and mortar state and they require you to have a physical office location in Hawaii to lend there, and we do not. But we're certainly open to it if you do, if you're one of the ones that wants to get a licensed originator there, we can certainly look into that as an option because I have done them in the past.
Interesting. Okay. Well, great. We had a lot of requests for people, too, to make sure that they received your contact information. We'll make sure to do that.
Okay.
Everybody will get copies of these slides at the end, so you will have access to reach out to Mike. And Mike, would you just prefer everybody email you, or would you like to send out something about information, or how would you prefer people contact you?
They are free to email me, of course, and it'll be possible for me to get a list after this webinar, correct, of all the attendees, because I can send out a blast with a little bit more information on the compensation per lead, loan packaging, copy of the disclosure, and things like that, just to bring everybody on the same page with what that would look like as well.
Absolutely, we can totally do that.
Okay, great.
Any last questions for Mike? Okay.
So if we don't have any more questions, just a reminder, you can type them in throughout the presentation, or we can ask them at the end of the presentation. Next, I'd like to introduce the USDA Rural Development Team that will be speaking next.
And the USDA does have so many great programs, you know, that do follow a more traditional packaging route. So we're going to hear about several different of their programs. So with that, take it away, USDA.
Hello, thank you. My name is Lynn Trujillo, and I'm a tribal member of Sandia Pueblo. I work as a National Native American Coordinator focused on rural housing service programs for USDA. Next slide, please. I, along with my colleague Ted Bulow, provide assistance and support to Indian tribes and tribal organizations across the nation, as well as to the various USDA rural development offices in each state. And on the slide, you'll see my contact information. But before we delve into the full presentation, we wanted to take this opportunity to thank OESTA for providing USDA rural development with the opportunity to participate in today's webinar. Our presentation will focus on opportunities for Indian tribes, Native CDFIs, and nonprofit organizations to add to their resources. The focus of the presentation will be on the certified loan packaging process, and we'll briefly touch upon the Rural Community Development Initiative grant towards the end of the presentation. We are excited to share information on Rural Development Certified Loan Packaging process. By using this process, Indian tribes and Native CDFIs may serve as a loan packager or as an intermediary. And there are many benefits of the certified packaging process. One, loan packaging is an additional resource of revenue for tribes and Native CDFIs. And loan packaging will help low-income Native American borrowers receive low-interest 502 direct loans and could even open doors to other programmatic assistance like our home repair loans and grants. Packaging efforts will help rural development provide programmatic assistance to more borrowers, but more importantly, it will give Native American borrowers additional technical assistance in compiling documentation and a complete loan application. So you'll learn more about this process in the next slides. At this point, I will hand off the presentation to Tammy Rapine, who will present on rural development certified loan packaging process, and we'll all be available for questions at the end of the presentation. Thank you.
Thank you, Lynn. This is Tammy Rapine, and I'm a finance and loan analyst with the Single Family Housing Direct Loan Origination Branch. I work for the Washington, D.C. office, but I'm actually located in Washington State. I did good this morning. I didn't say good morning because I know most of you are on a different time zone than I am, but If there's anybody here that's still in morning, good morning and good afternoon. We're going to talk today, next slide. We're going to talk today about several of our housing programs that assist from very low income households up to moderate income. And also talk to you about some opportunity that you have to package those loans and receive a fee for that packaging service. So we have the 502 Direct Loan Program, and under that program, there are two different ways that you can package loans and receive a fee, and we'll talk about that as we get into the slides. The 504 Direct Program is specifically for very low-income customers, and it helps them to repair the home that they already own, and there is packaging opportunity with that program as well. And then the 502 Guaranteed Loan Program, we'll talk about some of the applicant qualifications and then also how you have some potential as a tribal CDFI to act as a guaranteed lender. We will at the end of the presentation provide you with contacts should you have additional questions. I'm available to assist you at any time, so please feel free to reach out to me after this. Next slide, please. Okay, as I said, the 502 Direct Loan Program is for very low and low income households. Those loan terms are typically 33 or 38 years. And for a manufactured home, which is generally a new product, we're looking at a 30-year term limitation. There is no down payment. The applicant does need to have acceptable credit, the ability to repay the loan, and meet other eligibility requirements of the program. And with this loan, the family or the applicant can receive payment assistance on those loan payments monthly that reduces their payment to the equivalent of a 1% interest rate. Properties must be located in rural areas, hence our name, rural development. And the funds can be used to acquire an existing dwelling, build a house, or repair. And there's also the potential to purchase with repair. So a lot of options as far as how those loan funds can be used. The loan is made directly from rural development, and the servicing is also done by our agency. So it's a direct loan product from the government. Next slide. With this loan product, we also have a process where third parties can become part of a certified packaging process. And that helps us ensure that rural residents are made aware of the programs offered through the agency, and that potential applicants are guided through the process once they're ready for the program, and that the applications that are being submitted to rural development have undergone a quality assurance review. So basically, tribes could potentially work with households to assist them with assembling their application for the 502 Direct Loan Program. And then under that certified process, the tribe could package the loan or could also serve as the quality assurance reviewer for the application. And we'll talk about this a little bit more in the next slide. The information about this process, I've provided a link on the slide here to our handbook, and attachment 3A of chapter 3 of the handbook goes into the details of the certified packaging process and what is involved with that. Next slide. So one of the most common questions about packaging is how much is the packaging fee? And for this presentation, we'll really be focusing on the certified packaging process, but I wanted to point out on this table that there are multiple types of packaging opportunities that you could become involved with. And the type of packaging determines the allowable fee and whether or not that fee can be included as an eligible loan purpose. So for instance, on the first line, the certified process, which is really what we're going to talk about today, the permissible packaging fee is up to $1,500, and that is split between the person who's certified packaging that application and the intermediary. An intermediary really serves as the quality assurance. So a packager would submit their package to the intermediary who would review it, and then it would come to the agency for actual processing and underwriting. That fee can be included as part of the loan. It's an eligible purpose. if there is room in the appraised value. And when you're using the certified process, in those times when we have limited funding, there's typically a national office reserve set aside for this process, and so you would have access to those reserve funds. You can see on this slide that there are additional packaging types. Some of them are not a certified process, and those fees are less. So you can see down about 4 lines, approved non-certified packager, that's a fee up to $350. So it really varies depending on which type of packaging you want to do. Next slide. Now our 504 program is the repair loan program, and you also can package for that. And with that process, you don't need to go through any type of certification. With the 502 certification, you're taking a class, you're passing a test, but with the 504 packaging, you really just need to be aware of the program requirements, and then you can package those applications directly to one of our field offices. The fee can be up to $500 for a 504 loan, and it can be included as part of that eligible loan purpose. For the 504 program, we're providing funding to very low income applicants to repair the home that they already own. And the maximum loan with that program is $20,000. It's made at a fixed 1% interest rate for a maximum of 20 years. And again, with the packaging process, a $500 fee, up to $500 can be charged for those. The agency also offers a grant program for senior households who are unable to afford a loan, but the packaging fee can only be charged for loan applications. So we don't have any type of packaging fee allowed for the grant program. Next slide. So you may be thinking, now why would I want to package these loans? A lot of times your tribal homeownership activities already include credit counseling. You're already gathering the documentation to determine if they're ready for home ownership. And so by pulling that information together, you're putting the loan with rural development for them to process, but you're collecting a fee for the services that many times you have already done with that customer. You know your areas and the housing opportunities or needs that you have, so you're, I think, in the best position to really start the process. And all of us have the goal of increasing homeownership opportunities on tribal land and or to tribal members. All of our products for the 502 Direct program can be made on tribal land, whether that's tribal trust land or fee simple or leased land. So we're very open to all those types of financing. When the fees can't be included in the loan, for instance, the house doesn't appraise for a high enough value, then it can potentially be paid by the seller, by the buyer, or by other affordable housing products, so that the customer is still being able to have that fee paid on their behalf. And next slide. So just a quick rundown as far as who is involved in this certified packaging process that I've been talking about. And really there's 3 distinct parties involved in addition to the agency. So the first is you have an agency certified loan application packager. And this is a person who has gone to our 3-day training course, has passed the test, and they're knowledgeable in packaging applications. And then secondly, that person needs to be employed by a qualified employer, which is an affordable housing nonprofit, a public agency, a tribal housing authority, or state housing finance agency. So that could be either as a direct employee or it could be a contract employee, but that person who received the training needs to be employed by one of these type of entities. And then the third part of this process is that you have an agency-approved intermediary, and that is really an entity that has a lot of experience with rural development programs and is able to do a quality assurance review to make sure that that application has been put together appropriately. As an intermediary, you can also package loans. You wouldn't be doing a quality assurance of your own packages, but obviously if you have the experience to do the quality assurance review, then we make the assumption that your packages would meet that standard as well. So as an intermediary, you can serve in both roles. Next slide. Okay, so I've touched on this just a bit, but in order to become a certified packager, there's a 3-day packager training course that a person would need to take, pass the test, and then be employed by that qualified employer. As an intermediary, we have an application process where you submit evidence to support that you've met all the criteria, and those applications are mailed to the address shown here on the slide. We take applications at any time, and really depending on how you want to be involved in this certified packaging process would depend on which of these actions you would need to take. Definitely, if you have any questions on this, I'm your person to contact, and I can help kind of walk you through what the next steps would be. Okay, a second program that we have, which is not part of the packaging process, it's its own separate program. This is our guaranteed loan program, and applicants apply with a private sector lender. We did want to point out that as a CDFI, you can become an approved lender, so you could actually be writing those loans. The financing is 100%, typically a 30-year term with fixed interest rates. The qualifying ratios can be expanded, and gift funds, grant funds, and mortgage credit certificates are allowed to be part of the transaction. Many affordable housing types are eligible, including existing dwellings, new construction, modular, manufactured homes, eligible condominiums, etc. And the guaranteed loan offers the lender a 90% loan note guarantee in the event of a loss claim due to foreclosure, short sale, or other losses. Just to make it very clear, this is not a direct loan program like the loan I previously discussed. This is a guaranteed program. So rural development acts as the guarantee for the loan, and this is made, again, through a conventional lender. Next slide. So with the guaranteed loan program, a lender is using our guaranteed underwriting system, and the use of that system is free. The guaranteed underwriting system, along with additional electronic systems, allows for a completely paperless operating environment, so you're not sending documents through the mail, it's all paperless. And complete loan applications are submitted to USDA for review, and typically within about 3 business days, a conditional commitment is issued and the lender can proceed with closing the loan. Eligible lenders can retain servicing of the loan or sell the loan to an eligible servicer. And USDA has recently delegated all servicing decisions under the regulation to the lenders. The guaranteed loan program is delivered under the regulation 7 CFR 3555, and they also have a handbook, Handbook 1 3555. Next slide. The guaranteed program does have a Native American pilot, which is relatively new, and it allows the tribe as a junior lien holder on a guaranteed loan. The pilot program is for the treatment of loss claims for guaranteed loans located on Native American tribal lands. It allows the tribe to be listed as a junior lien holder on title at the time of loan closing. And in the event of a loan default, the tribe may buy out the loan servicer at the net recovery value. Once the tribe owns that property, they can then determine how to proceed because the property is now in their possession. There is only one state currently participating in this pilot, and that is South Dakota. So we are looking for additional states to participate, and you can contact your Rural Development State Office to request participation in that pilot if you're interested. Next slide. The guaranteed program has a training site on USDA Link, and this slide gives you the details of where to find that. and also where the training is. They're about mid-page on the screen, highlighted in yellow. It shows the training. There are 28 training modules that are available at any time, and you can visit this site anytime and check those out or get additional details on maybe upcoming training as well. Next slide. And the next slide for Guaranteed shows the contact for USDA Guaranteed Loan Programs. The loan coordinator, each state has a loan coordinator, and they can answer questions that you might have about the Guaranteed Loan Program. And it's just another option to assist you with serving either low or moderate income home buyers. The applicant does need to contact an approved lender to get their application started, so they would not contact Rural Development to start that process, but the lender would start the process and then request the guarantee from our offices once they're ready for that. Okay, I know that I talked fast because we've got limited time on this call, but if you would like to discuss this further, you can contact me at the information here on this slide for either the 502 or the 504 Direct program. And if you have questions regarding the Guaranteed program, you can contact Joaquin Tremels. He's the director for the Guaranteed division, and his phone number and email are listed here. Next slide. USDA is an equal opportunity provider, employer, and lender. This slide provides information on that, as well as how to file program discrimination complaints. And we make sure that this information is always provided to our customers because we do strive to meet these requirements and make sure that we're operating our programs well. All right, next slide. Again, there's my contact information if you do have any questions, and I guess we'll open it up for questions, and then I will turn it over to Shirley Stevenson, who will talk about the Rural Community Development Initiative grant.
If anyone has any questions for Tammy, feel free to raise your hand or type them into the question and answer section. I'll just give a few moments before we have Shirley speak about the additional programs at USDA. Okay, well, we do have one. Where would we be able to take the 3-day class?
Okay, those classes are offered at various times during the year and in various locations. There is a course coming up in May in Minneapolis. What I can do is send you a link where you can sign up to receive program information, and as those classes become available, we send it out via that email distribution system. So I can send that to you, and you can send that out to the participants potentially?
Yeah, that would be great. We have a follow-up email to go out to all the participants, so any resources that we discuss, we can put those together and send them out.
Okay, I will get that to you right after this.
Okay, and if anyone has any questions, again, please type them into the question and answer section. And we have a little bit of time spaced out at the end of this presentation to discuss any remaining questions. So next, we'll move on to Shirley.
You ready for me now?
Hit it.
Okay. I'm Shirley Stevenson. I'm the Community Program Specialist in the Community Facilities Program. I am located in the national office in D.C., and today I would like to provide a brief overview on a technical assistance program that we administer that may be of interest to you. The program is called the Rural Community Development Initiative, or RCDI. Next slide. The RTDI program started in fiscal year 2000 with a $6 million allocation from Congress. The program was developed to build the capacity of recipients in the areas of housing, community facilities, and community and economic development in rural areas. Next slide. The delivery system for the program is similar to a three-legged stool. You must have all three in order to stand or to be eligible. How it works is that the rural development provides the grant to the intermediary, who will be the applicant. The intermediary will use the grant funds to provide technical assistance to the recipient, and the recipient would take what they learn to their community, which would be the ultimate beneficiary. An example of how this works, I usually use home ownership education classes, and how it works is the intermediary can provide training to the recipient on how to conduct home ownership education classes. The recipient then provides an ongoing home ownership education classes or courses to the residents in their community, and who will be the ultimate beneficiaries. This is a train-the-trainer concept, and this really meets the intent of this initiative. The intermediary is providing technical assistance that will build the recipient's capacity by enabling them to conduct home ownership education classes to the public. Now, if the intermediary was working directly with the individuals in the recipient's area, then it wouldn't work because they will bypass the recipient. So when you're considering this program, please make sure that you have three parts. You must have an intermediary, that could be you, providing training to the recipient organization, who would take what they learn to the beneficiary, will be the community. Next slide. The intermediary. There is no restriction on the type of entity or location of the intermediary organization who serves the grantee, who's going to be the grantee. So the intermediary and applicant are the same persons when I'm talking. The intermediary must have been legally organized for a minimum of 3 years, and they must have the experience and expertise to provide the technical assistance to multiple recipients. Now, in this program, there is a dollar-for-dollar matching fund requirement with this program. Matching funds are cash or confirmed funding commitments. In-kind contributions such as salaries, donated time, goods and services cannot be used as matching funds in this program. It must be cash or confirmed funding commitments. Next slide. Now for the recipient. The recipient is the entity that's going to receive the technical assistance from the intermediary. Eligible recipients are nonprofit organizations, low-income rural communities, or federally recognized tribes. The recipient must be one of the three. Next slide. And the beneficiary are the entities or the individuals that receive the benefits from assistance provided by the recipient. As again, 3 legs, train-the-trainer concept. Next slide. Now, the recipient and the beneficiary, but not the intermediary, must be located in a rural area. For this program, the definition for rural is 50,000 or less in population. And the reason why I say this program, because working with rural development, depending on what program that you work with, the definition for rural varies. So for this program, the definition for rural is 50,000 or less in population. Next slide. This slide is giving you examples of eligible purposes. Remember the train-and-train concept when considering the RTDI program. You must train. It's technical assistance only. Next slide. Remember, as I said before, and I've said it probably 100 times already, this is a technical assistance program. RTDI funds cannot be used for construction or to purchase real estate or vehicles at all. Now, as far as the revolving loan funds, the intermediary may provide technical assistance to the recipient on how to create and operate a revolving loan fund, but RCDI funds cannot be used to fund revolving loan funds or IDAs. It must be for technical assistance. You can assist, teach them how, but you cannot do for them, and the funds must be used for training purposes only. Next slide. The program has been funded at a $6 million level since 2000, and later it was reduced to $4 million in fiscal year 2015. And over that period of time, USDA has approved 442 grants for approximately $84.5 million to eligible organizations trying to improve the quality of life in rural America. Next. Now, this program is awarded competitively and is based on the merit evaluated against the criteria and a NOFA, or Notice of Funds Availability, that will be published in the Federal Register. It has been published annually. It will be published soon. I can't tell you exactly what date, but we're hoping to have it published before the summer. So any additional information you need on this program, you can go to this website here. You can also, like I said, the NOFA will be released soon. You can also review past NOFAs to get more information on the programs, and also it can help you plan for your application if you're deciding that you're interested in this program. You also can contact your local rural development office, and they should be able to assist you as much as they can, answer questions, and assist you prior to the application deadline. Next slide. This is my contact information. I know I was quick and dirty, but they asked me to give me a little commercial on the RCDI program. But if you have any questions, you can always contact me at this information here, or you can contact your local office. And that's it for me, Lynn.
That's great. Yeah, RCDI is an interesting program. I know you guys, it's really great for those of you who are intermediary organizations, or we do have quite a few people who are part of larger networks, like part of asset building coalitions and stuff like that, that might be able to use that program effectively. And I just wanted to add too, I will sell the USDA in that the RCDI program doesn't necessarily cover revolving loan funds or anything like that, but the USDA has 3 gazillion programs, many of them that do, that we didn't get to talk about. So whatever your need is, the USDA has a cool program for it, let me tell you. So were there any other questions about any of the, we're at the part of the webinar, if there were follow-up questions you had, either about the 184 program or any of the great USDA programs we learned about packaging today, go ahead. Now it's your shot.
If you'd like to ask the question using your phone, we are happy to unmute you. Just raise your hand. You can use that feature, or type your questions into the question and answer field.
Well, it looks like we are not having any questions come through, but like we said, we are going to send out all this information following with the slides with everyone's contact information, so you can most certainly make those connections and ask those questions if you have them. So we just want to thank all of our panelists. This of course is not all the programs out there that you can package for. There are cool veteran programs out there, different things like that, but we just wanted to plant the seed and the idea and give you some contacts for people if loan packaging was potentially a thing. We as CDFIs can't cover and do everything and provide every single kind of service, but we do oftentimes end up that one institution in the community that everybody is coming to and everybody has needs. And so as you see those additional needs, it's great to have resources that can help supplement and meet those full range of services through these different kinds of partnerships, and especially if they earn you a little bit of extra fee, it's always good to be self-sufficient. So thank you for all of those ideas. I know I'm thinking creatively around some ideas myself. So With that, have a great day. Anything to add, Steph?
No, just look out for our future blasts for our webinars coming up in April, and thank you so much to all of our presenters. And thank you all to the participants. We'll chat with you later.